Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis on Monday, November 3, 2014. Here's a daily chart of the SPY, and basically we had a nothing day. It was a day in waiting for the election, I believe, which is tomorrow, and you're probably going to see more of the same tomorrow. Maybe some rumors float out later in the day, but I doubt it. Really, the market probably won't do much tomorrow. If anything, it may trend down slightly, and the reason being is because we look to be putting in somewhat of a top. Here are your old highs. You pierced through the old high today and finished below. The market's kind of stalling out. You had this parabolic move from the 15th of October all the way up with barely a down day, two down days, one slightly and one, more than slightly. Other than that, it was just a relentless move up, and the market's tired, and the market has to pull back, and that's where we are right now. But that being said, there is one more chance for a blow-off top to occur, and if that occurs, the number I have in the ES contract, which is the S&P E-mini futures contract, is somewhere. It's a range, so it would be somewhere in the 2032 to 2050 area. So that would probably coincide with, let's see, that would coincide roughly with probably about 2060, 2065, roughly in that neighborhood on the SPX or the S&P Cash Index. Right now that's at almost 218, and the E-mini has a 209 right now, so that's a spread of about 9 points, let's say. It's not going to always work out that way, but it doesn't really matter. The point is that if that's going to happen, that would most likely happen next week, and it's a lower probability, but it could happen. Other than that, the market should pull back. We should pull back and then have an end-of-the-year rally, and whether that end-of-the-year rally makes new highs remains to be seen. It all depends on how the pullback occurs and how deep it occurs. It could come down to the 200-period moving average. My guess is the pullback would probably go to the 382 retrace, which would be about 194, 195. And that's probably all you're going to get out of a pullback at this point in time. If there's more to come, we'll know it when we see it. If it becomes a violent pullback, the chances of it stopping here lessen severely. But if it's just a normal, 10, 20 point S&P, few days in a row type of pullback, that's all you're going to see is about 194, 195. If we get a really violent sell-off for some reason that obviously we can't know in advance, then, one of those 30, 40 point S&P days, 400 point Dow days, that changes things a little bit, and we'll see what happens if we get it. But right now, that's what you look for. You look for what they would call an orderly sell-off, which would be no real huge down days. That would probably stop at the 382. Anything other than that may go all the way to the 618, which is down here at about 190, 191. So that's what we have there. And, further we go during the week, we'll see what happens. You're probably looking, all things being equal, what you're looking at this week is what you had is a lead up to the election. That's what it looks like that happened. So maybe that was on the anticipation of the Republicans taking over the House or the Senate and controlling both the House of Representatives and the Senate. And whether they win or not, you can still get the sell the rumor or sell the news event, which would be after the election, the market sells, and then they'll come up with an excuse after the fact. Well, there's still going to be gridlock in Washington, or, well, the Republicans are going to want to cut spending, therefore there's less money in the economy. Well, they're going to want to do this, that, and the other thing. So that's one scenario. Or the other scenario is maybe they lose, the Democrats retain the Senate, and the market sells off because everybody thought the Republicans were going to win. So those are two scenarios that could happen. Or a third scenario could be the gridlock scenario or the runoff scenario, excuse me. So that would be in, I believe it's Louisiana or North Carolina. No, it would be Louisiana or Georgia, close races that have to be won by a 50% majority, or sorry, 51% majority. If they're not won by that much, they would require what's called a runoff, and one of those two wouldn't be decided until January. So that would be the old uncertainty conversation. Maybe the market sells off from that, or not. Maybe it just shoots higher for some reason that I just can't see. I find that unlikely, although there is a number that the market may want to achieve, and it may want to achieve it within the next week or so, and it's up pretty high. It's probably 30 points higher than we are in S&P points. We'll just leave it at that, and we'll see what happens. So let's move on, and let's talk about oil. The USO and oil in particular, got hammered today. In the middle of the day, oil all of a sudden dropped off, and the price of crude currently is $78.35. So we closed below 80, and we closed below that level and this support level on the USO. And I have to believe that what I've been saying, which is 75, give or take a dollar, I know that's a $3 range, but I was 75 was my number, and I still think we go to 75 on the price of crude. And we'll see what happens over the next several days. We'll see if it happens this week. But it looks to me like crude is going lower, and that's going to bring up the deflation conversation again. So gold going down, oil going down, brings up the deflation conversation, and that scares the markets because I think the pros know that the Fed has no way to really fight deflation. They can try and create inflation, but if there is true deflation, they really have no defense towards that. So, basically, the last time, Paul Volcker fought inflation by raising interest rates. Japan has been fighting deflation for like 25 years. And basically, they're trying another stimulus. Who knows how many this is as of last Friday. And they still haven't been able. They've been able to elevate their stock market from time to time. But all in all, they've been fighting deflation for 25 years. Maybe they finally licked it now. We'll see. But in turn, they're crushing the yen, which is going to have other ramifications later. Let's not get off the beaten track. I don't want to digress too much. Let's go over to gold. So gold is hovering in the 1165 neighborhood. So we broke 1200. We're going down. My best calculation says we're going down to around 11 and a quarter, give or take. A lot of folks believe 1130 is an important number. So either way, I think 11 and a quarter is in the cards, but we may get a reasonable bounce here soon because 1150 to 1160 has a lot of support also, and there can be a bounce off that level, and you would find resistance in the 1185 to 1195 neighborhood. We'll see how it plays out. There's no play in gold right now. You don't play it down after it's fallen this much, and you don't try and catch a falling knife because markets can always fall more than we think and they can rise more than we think. So we let the market tell us what to do by virtue of the charts. And when the chart gives us a signal that gold has bottomed, we can certainly hop on the train and take it for a ride. We don't have to find the low. We don't have to catch the falling knife. It doesn't work more than it does, so there's no point in trying to do it. Okay, so what else do we have? I think that's, well, you know what? Let's take a look at one last thing. Let's go back to the market and let's take a look at the IWM. And let's just compare the IWM on an intraday basis to the SPY on an intraday basis. Because as we know, the IWM is a market leader up and down. Okay, so the IWM opened up this morning and made this this high here, and then it kind of went flat for most of the day and sold off in the afternoon. Now the SPY, okay, the SPY still finished up on the day, and the IWM did not. I believe the IWM was down. Yeah, the IWM was down about 1/3% today. But here we have the SPY made a high, and then it went up throughout the day and then sold off later in the afternoon, but still finished positive, and the IWM sold off and finished negative. So it's a small divergence. It's something that I'm just putting in my notebook as something to watch over the next day or so. And we look for those tells. I don't make much of it yet, but it's something that could be developing, so I want to know about it and I want to watch it. So that's where we are today. We're probably in a holding pattern until after the election, so I wouldn't look for a lot of action until Wednesday, but we'll see what happens. We'll see what tomorrow brings. I'm David Frost, MyStrategicForecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.